Closing day, it's finally here. That means that your home buying journey has come to an end. Be ready to sign a lot of paperwork and shake a lot of hands. Here are a few things to know about your closing day. First is that you'll have a chance to take one last look at the house before signing on the dotted line. Your purchase contract should stipulate your right to what's known as a final walkthrough, usually within 24 hours of closing. So your real estate agent may or may not go with you on this last pre-purchase visit. I know when we did our last one, the real estate agent wasn't able to make it. It really just depends on your specific situation. When you go, take a close look and make sure that all of the repairs have been completed, that all of the appliances and fixtures that are supposed to be there are there in the home, and that all unwanted items have been removed by the seller. Let your agent know right away, immediately, if there are any problems on that walkthrough. There shouldn't be, right? But it does happen. Now, after a careful review of the closing disclosure, and we'll talk about that a little bit more in a minute, after you review that document, your agent, your lender will let you know if you need to bring any kind of payment to the closing table. Closing agents usually require either a cashier's check or a wire transfer when it comes to your cash to close. What you can't do is just bring your checkbook or a wad of cash, right? It can't just be a lump sum. It's got to be through these documented, verifiable trails. Now, someone from the title company will usually run your closing meeting. This closing agent goes over all of the paperwork, and there is a lot of paperwork, and gets all the necessary signatures. Your real estate agent will typically attend this meeting with you too. It's nice to have a familiar, comfortable face with you in the room, but also know that sometimes the seller and their real estate agent might be there as well. In terms of scheduling your day, give yourself at least an hour to be safe when it comes to your closing. Some closings might take more time, some might take less. So as I mentioned, your signature plays a really important role during the closing process. So kind of get ready to feel like a celebrity. You're going to sign a lot of documents, and we're going to go through a couple of the important ones now. So the first is known as the closing disclosure. So this is a final review of all of the loan fees and costs that are associated with this transaction. And by law, you're required to get this document at least 3 business days before your closing. When you get it, you want to compare it to the loan estimate that you received earlier in the loan process. You'll also sign a promissory note. This is basically like a legal IOU, okay? And really what it does is it explains the lending agreement between you and your lender, including things like the loan amount, the interest rate, the number of years in your mortgage term, and more. Something else you'll sign that's really important is a mortgage note or a mortgage deed of trust. And which one you sign, whether it's the note or the deed of trust, really depends on where you're purchasing and where you're going to be living. But these two things, the note and the deed of trust, they really do the same thing at the end of the day, and that's legally pledge that property you're buying as security for the loan. That means that the lender can take back that home if you stop repaying on that loan. So at closing, you will also finalize the title of the property. There are a lot of different ways to hold title, and it is not a throwaway decision. Divorce, death, lawsuits, and more can all lead to title-related issues and implications. If you have questions about how to take title for your property, talk with your loan officer, talk with a financial professional, talk with an attorney, or all of the above. Every buyer's situation is different, and some title scenarios may be more beneficial than others. Now, once you're finished with all of the paperwork and signing those documents over and over and over again, someone will finally hand you what you've been waiting for, the keys, right? The keys to your new home. After you leave the closing meeting with those keys in hand, someone from the title company will typically take your deed to the county's administrative offices, and it's at those offices where that deed will be formally recorded. At this point, your home purchase, it's a matter of public record, and that means that some of the information about your purchase, it'll be accessible to anyone in your community and beyond. And last, and this is a really important piece, when it comes time to make your first mortgage payment, you might not be sending the money to the same company that financed your purchase. And I know that might sound a little odd, but it's actually completely normal. So some mortgage lenders will make a loan and they'll go on to what's known as service it. That means that they're collecting the monthly payments, that they're handling the escrow accounts for your property taxes and your homeowner's insurance and more. But lenders can also sell the servicing rights for the loans they make. That means that another company is now responsible for collecting the payments, for forwarding on your principal and interest portions, and even in some cases, initiating foreclosure proceedings. It's important to understand that the rates and terms of your loan, and this is a key point, the rates and terms don't change, okay? So if your loan gets sold, the rates and terms will stay exactly the same. In addition, lenders are required to notify you at least 15 days before your loan servicing is transferred to another company. Beyond that, your new mortgage servicer cannot charge any late fees or penalties if you accidentally send your first couple of payments to the wrong place, which does happen. Please don't take it personally if your lender winds up selling your loan. Some lenders don't service any of their loans. Others service some of them and sell others. At the end of the day, it's a purely financial decision. And this is another way for VA lenders to generate revenue, which in turn helps them make more loans to veterans, service members, and military families.